What's up, everybody? Doing a market recap video for today, March the 4th. Crazy day in the market. Only going to talk about SPX and NAS today. I'm going to talk about some reflections, some of my own thoughts, some of the stuff I'm seeing that's really good from the community and the fam that's out there. I think a lot of people are feeling pretty good. Yeah, a lot of higher lows were hit. Maybe somebody just broke the higher low a little bit more. This is why we talk about that theory, right? In the event that the dip is not bought and the dip keeps on dipping. We knew eventually there would be a dip that just kept on dipping. Stocks don't always go up, but you get conditioned, you get programmed to believe that. And to myself, to a degree as well, right? So, I'm doing reflection. I've been sitting here staring at the charts, trying to figure out what I missed. What was the one moment that I could have done things very differently in terms of where I thought we were going to go. On the weekend video, I put out two scenarios, the bull scenario and the bear scenario. And the bull scenario, to invalidate the bear scenario, if you recall, is I talked about when we bounce back up in here, if we reject the golden pocket, I would be concerned, right? That would be right here. If we reject the golden pocket, I would be concerned. And then we'd be concerned that we're going to go to the bear scenario and we're going to drop down. And I'll talk about that on the NAS as well. But instead, we didn't do it. So the market gave us an opportunity in here. We knew that was our top. We broke to a new high. We backtested top. We dropped. And then once we revisited in here, this was the good bear entry signal. And then we dropped. And this drop in here is where I called it a bear trap. And the bear trap is where I fall into a trap. Because I'm also very aware of ensuring that people understand there's going to be a dip that is not bought. But because of the aggressiveness of the bull market that we've had, it's been absolutely huge, right? Let's look at this. Let's put that in perspective, right? Let's put this in perspective. This is fantastic as well, but this is, as you can see, this is a remarkable bull market that we were in, still in. This was great. You can see the drop and over here, right? Let's put that in perspective. So also, as much as I'm aware that, we're going to be prepared for a dip to not be bought, and that's why I've been in the capital preservation mode since OPEX, very much less trades, less swings, less size, been focused on names that are only moving versus trying to catch the NAS stocks. I was also under the impression that this move right in here was the bear trap. Right? That we still had the lower trend line. The lower trend line was in our favor. We broke to a new low and was immediately bought up by tons of bull volume. So doing reflection on my own, I subconsciously convinced myself that this is a buy the dip scenario. Although I wasn't really buying the dip personally, right? But I wasn't looking for the bear entry. As soon as we broke, and I'll talk about looking for the bear entry as well. As soon as we broke over that GP zone, I was convinced because we didn't break the golden pocket, because we didn't reject the golden pocket, we were going to go up. That was a mistake, and I'm going to tell you why. And I'm sitting here, I'm looking at the charts trying to say, what did I miss here? Forget about Jay Powell today. Forget about what Powell did today. Powell didn't bring the pow for the bear trap today and push us up and save the lower trend line from growing. So I saw we got stuck at the 0.786. And right under the 0.786, we had a bull flag. And as you've heard me talk about, a bull flag under a resistance zone is not great. You don't really love it. It's not something you really want to trust, but it's there. And subconsciously, I'm kind of programmed that it's going to be another buy the dip scenario. And every dip that we've recently had, I did not buy. I waited, I was a little bit late, and then I participated to the upside. So in this case, I was going to do the exact same thing. So if you did follow me in that mindset, in that capital preservation, wait till we get clarity and we get out of this choppy zone, you're still really good. I feel really good. I don't feel really good as an influencer trying to help people make money, because could have made a lot of money here on a bear play, or just been really, hey, cash, guys, this is going to drop. Could have done all that. So here's what I see. We get the break of the GP. We go up to the 0.786, and we have a bull flag that shapes up under it. Now, okay, bull flag under resistance zone, which is this. You really want it, but I'm thinking pretty good. And then we drop. And I didn't want to lose this zone. Red flag number one, major red flag number two. We couldn't have lost the lower trend line. The problem was the elephant in the room, the problem child, The one that's been causing all the problems was the NASDAQ. It was not SPX. I was focusing on SPX Golden Pocket when I needed to focus on the problem child's Golden Pocket, and that was the NASDAQ. And I'm sitting here and I'm looking at the chart and I just like had an aha moment. And I was just like, how did they V shape it, back up, didn't break the Golden Pocket, and positive 0.786, and then drop the market? Well, what's dropping the market is the NASDAQ. The NASDAQ's dropping the market. Dow Jones was fine until the NASDAQ went crazy. XLE, XLF, they've been fine. It's all been about the big tech growth stocks. So here we go. We dropped, boom, we came back up, we bounced, and we dropped further. This was the bear trap, popped right back up. In here, at this moment, I started focusing on SPX Golden Pocket, and this is from this movement here to here, and we rejected the Golden Pocket right there. This gave the cool off, the liquidity event, to allow bulls to believe we're going to go straight back up, to get enough liquidity in the market to then shake that all up, right? And then you see today some capitulation happening. Whenever we are looking at a chart and we have a thesis and we're thinking about things, we have a perspective and we're wrong, you got to go back. You got to go back and circle back as to what did you miss? What was there? Something was clearly evident. You can always look to a fundamental point in the market. What was the fundamental reason that we dropped today? Jay Powell, Jay Powell didn't talk about yield curve control. He didn't mention it would be capped, and then the market reacted right away. Now, if he wasn't going to talk today, was anything going to be different? Right? We were pretty bearish already going into today, so was it going to be different? That just helps escalate. It helps fuels where the chart wanted to go. So the key message is, no matter how good you are, no matter how many good you think you are, there's always a learning. What was missed? What could have been done differently? I know for sure we are conditioned to buy the dip. The saying stonks only go up. How many new active traders there are this year? It's been a condition that the market has allowed people to feel this way and to have that confidence that the Fed will just come in and they'll help push things back up, and that's going to be the case. And the market doesn't give you the signal, right? They don't say, hey, here's the opportunity for you to go short. They make it difficult. It absolutely makes it difficult. The good thing that's happened for me over my time is that I know when it's not that moment. It's not that moment to be aggressive, chips in the center of the table, swinging lots of positions. So I go into capital preservation mode and I get really patient, and it allows me to take advantage of the opportunities that are about to be presented. We have a lot of opportunities that are going to be presented on a day-to-day basis, and we need to take it day by day. But just like for me to come out here and tell you guys that you watch these videos, you probably got a lot of education from it, that myself included, we always got to circle back. What are the things that we missed that we could have done differently? Now, to us, to the accounts, to the higher lows, to your psychology. If you're having a rough time right now, and I can tell by the members that fit, good portion, excited, preserved, excited. One guy just paid off his mortgage. Congratulations. And then there's others that didn't protect a higher low perfectly. That's okay. I'm here to tell you that's okay. You need to go through those lessons. I'm not sure if I talked about this on a recent video, but you need to go through those lessons. It's one thing to hear it from me. It's one thing to hear it from anybody else that you're using as a mentor to help get you through the market. It's another thing to go through it. And when you go through those lessons, you will remember them. So the next time this opportunity arrives in the market, what's the opportunity? The opportunity is that we're in a choppy market that might create a glorious dip buy the dip scenario later, a little bit deeper, yes, but while we're in that choppy market, you need to recognize you're in a choppy market and get protective. And getting protective means protecting your high low, less trades, day trades, scalp trades, intraday movements only, be super selective, chill, understand one of the hardest things traders have a hard time developing is patience. I have a lot of patience, and I'm exercising that patience right now. big time exercising their patience, because I want something to come over here and say, buy me, you know what I mean? Just shakes you, buy me, like it's right, we're ready to bounce, we're ready to go. Then we make some money. We're not going to make the money that we just lost if you were playing bull the entire time. Like if you hit your high or low, your next trade, the objective is not to go to a higher high. Your objective is to find a good trade and find a profitable trade. That's it. Over time, we will get back to new highs. Over time, we will get, let's look at this here. This will reappear again in the market. This will reappear again. This will reappear again. Reappear. This is the market is built to go up. Okay, the market is always going to be going up. There's times where we go into a corrective mode, we go into a bear market when we see strong corrections. But overall, the market is built to go up. The S&P 500 is the strongest 500 companies in the world's greatest, strongest economy. It's built to go up. The weak get replaced with the strong, and we go up. That's the way the nature of the S&P 500 is. That's why it's gone from where it is to almost 400. 400 was another thing that kind of got in my head. That we got so close to 400, 4K, we'll hit it. We'll absolutely hit it. And we did. We got to 396. So that was another thing that was in my head. Yeah, we're going to get to 4K. We should tap 4K before we drop. So anyhow, the market's built to go up. So we are going to have this opportunity. You need corrections in the market. You need those corrections in order to create the next big run. So the challenge is being patient enough to wait and understand when it's time to get back in chips in the center of the table. That will come, and there will be a huge amount of opportunity. If you gave back here, and you gave back more than you wanted to, you needed to learn this. You needed to understand this guy keeps on talking, predicting my higher low. This is buy the dip, but stocks only go up. You know now that's not the true. That's not true. There's going to be corrections in the market. And when they correct, it hurts, right? It hurts, especially if you're playing stocks in that correction. This correction right now is 11% on the NASDAQ. Bear market territory would be 20%. Let's go look in relation to what it did to an individual stock. We could look at Tesla. So as the market corrected, what did I just say? 11%? Tesla has corrected how much? 33%. So if you made a lot of money in this market, like myself did on Tesla, you're going to be still trying to trade Tesla. And what's happening is you're getting blasted. Not recognizing that Tesla's not going to do what Tesla was doing right now in this environment. And now the market is going into correction mode. It's going to hurt Tesla even more. And that's what's happening. Anything in big tech or in tech is getting blasted. Growth stocks are getting blasted. So this is why you realize you can't just hold. You can't just, hey, I'm just going to buy the dip, I'm going to hold long. Because if you're doing that, you're feeling very uncomfortable right now. And what ends up happening is you end up selling the bottom. And when you sell the bottom, you capitulate. And then that's when bulls come in and the market gets bottom and go back up. And then you're sitting there, what just happened? Tesla's an example of a chart here, right? Using the higher low theory. You're up 100K, right? You're up 100K at the top of the chart, right? Right in here, you're up 100K. Now, it falls in here, and it still kind of looks a little bit bullish. Maybe we're going to push right back up, that dip being bought in here. Maybe it's zigzag, and we're going to go straight back up. We're going to go to 1,000, Tesla 1,000. So you're up 100K, and now the market drops, and now you're over here, and now you're at 75K. Let's just use those quarter numbers, right? You're at 75K. So you gave back 25, and you're at your higher low. Maybe 75 was your higher low, and you're saying, man, I just gave back 25. And you're like, you know what? I'm going to give it some more room. I believe Tesla's going to bounce. I saw this person posted this chart or whatever that says it's going to go, boom, this is going to be the bottom. So you stick with it. You get aggressive. And what happens is you don't respect your higher low. And when you don't respect your higher low, you don't respect the game. You don't respect the business. You don't respect trading. Not to say there's anything wrong with that. You need to understand and learn from experience that, man, I better respect it. I better respect the higher low theory. So what happens is you blow through it. And now, here you are. And this is where some traders are at right now. And let's just say it's 25K. Okay, 50K, boom, we blew it. So we're at 25K. I think that's a good illustration, right? 175, 25. So you got 25K profits. You're up $25,000. But your mind says you're down 75. Because when you hit that 100K profits, that felt like, man, euphoria. Euphoric. You love this. Stocks slowly go up. That's the way the market is. This is great. I'm just going to hold. Every time I hold, it just keeps on going higher. Now we get down here to 25K and you lost 75K of your gains. And now you reflect back to, I needed to protect my higher low. If I protected my higher low, I would be in such a good position. And then what happens is you still haven't sold, right? You still haven't sold. And now the chart drops further, you go to zero. And at zero, in terms of profits, you give it all back. What do? You sell. You sell right at this point. Capitulation, you sell, and what happens? Chart goes up. Now, when the chart goes up here, this move, you don't play it because you just capitulated. And you can't fathom the fact that it's higher now. And you've given back all those gains. To the point where it gets to a certain level and you have so much FOMO that you enter. You enter right here. Right at the moment of the bull trap. And then it drops back down. And then it's over. Oh, I wanted that to stay up there. And then it's over for your trading career. Right? That's not going to happen to you. But it happens to a lot of retail traders. That's not going to happen to you. You will not allow that to happen to you. It won't happen to you because you invested in yourself. You've been watching these videos. You've been coming here. You've been understanding. You needed to go through the experience of blowing through your higher low, but you're not going to do this. Right? Say it out loud. You won't do this. You won't let this happen to you. You won't sell at the lows and then buy back in near the highs. You're going to get a little bit protective right now, or you already did, and you understand, hey, you gave back more than you wanted. But this is the rookie. The rookie's going to do this. This is where the rookie's going to get blasted, right? They give it all back. They sell the lows. We get a volume climax. We bounce. We go up. That's the way the market works. That's how the market slaughters traders that don't respect risk management, that don't understand hope, fear, greed, regret, don't understand charts, don't understand volume climaxes, don't understand the cycles in the market. You're going through that journey. If you blew through your higher low, it's okay. I promise you it's okay. You needed to learn this experience because now you can teach it because you've gone through it. And if you don't learn from this one, this time, you're going to do it one more time, eventually. This time is different. You feel great. You know, market's great. We're going up, and you'll do it one more time, and it'll be the last time you ever do it. Ideally, if you did it this time, this is it. You write it down. Remember all those times I was talking about walking up your sticky note, placing where your higher low is? How redundant was that? I had like people making fun of me that I kept on talking about it. Like, not making fun, but like poking that, oh, yeah, how many times is he going to say higher low in the video or whatever? Not making fun. Having fun with it. Don't make fun of me, right? So now you see, right? Now you see what's happened. I feel for people that blow through their higher low. I feel for those individuals that have to go through that right now. But I promise you, it'll get better. You will feel better in the end. You learned this lesson. It's a lesson learned in blood. You're not going to forget it. You will be a better trader in the future for it. Doesn't feel like that right now. You're at your lows. When I talk about that emotional scale, 40 to 60, like the RSI scale, 30 to 70. Being below 30 RSI, the chart is oversold. Being above 70 RSI, the chart is overbought. Your emotional scale, you want to keep it between that 40 to 60. Never getting too high in the euphoric moments. Never getting too low when you're giving back. When you can stay and keep yourself in the 40 to 60 zone, you're a professional. You will balance your higher lows. You will balance understanding all your trades can't be right. You will balance the times that you need to scale back because you feel your emotions are getting a little bit too high, a little bit too euphoric, or the other way around. You're a little bit too down right now. You take a break. If you gave back a little bit more than you wanted to, you don't need to trade tomorrow. You don't need to trade next week. You need to be calm, be patient, understand the market will provide opportunities. You don't need to trade every day. Not every day there's a trade. Be patient. Wait for A+ setups in a good trending market. We are looking for a big bull day in the market. There will be a big bull day in the market. A big green candlestick is coming. When that day comes, it's easy money. You just throw your money in there, boom, go for it. Play whatever you're going to play. Everything's going up. Here's the big bull day. Here's your money. You make some money. You take it off. Take it off. That's the thing that's going to struggle. That's the thing that people are still going to struggle with. Because people are still going to write, buy the dip, stocks only go up, that's the nature. And you're going to fail to recognize that we're still in a downtrend and our window of opportunity is smaller. And I'm just going back to the basics. I know I talk about these things lots. When we're in a downtrend, our window of opportunity is smaller. I am a bull. I am looking for bull plays. I'm not a bear. I'm not looking for bear plays. Now, if we were to go into a bear market, a long-term bear market, there's potential, possibility that this could happen. We can't say it's never going to happen. It's not going to happen right now. There's potential that it could happen. And I'm talking about a bear market that lasts 1 year, right? Not 2 months, not 1 month. 2 months, 1 month wouldn't factor for me. We'll still go look for the bull plays because in any market, there is bullish trades. Now, some stocks will still remain bullish as we're seeing right now in some of the energy sector, banks. We have lots of bull charts. Or just some bounce plays, oversold bounces, volume climaxes. There's still the bull play there. Naturally built to be a bull, so I'm not actually looking for the short position, the bear position. That's my style. You have to be the trader you want to be. Do you want to play both directions? Do you want to, hey, I'm going to go short here, I'm going to go bull here, flip around? That's fine. You got to be the person you want to be. My account has grown. My success has grown from my style. My style will remain. I'm not going to change my style unless I can clearly see, boy, this is going to be a very long downtrend. We're going to go into a bear market now. Like, okay, then we're going to have to adjust. Man, there's nothing bullish out there. There's still a whole ton of stuff bullish out there. Ton of stuff. Energy, banks, reopening stocks, all bullish, right? Where's the money coming? It's coming from the NASDAQ. So I'll still be looking for the bull plays. But that's the gist of the story, guys. You needed to go through this. And it's good for you in the long run. It doesn't feel that way right now. But I promise you, you will come out better for this. I did it. I did it. That's why I can come on these videos and tell you about it in advance, before it happens, that you need to be the 40-60. You need to be protecting the higher low. One of these days, these dips are not going to get bought. You need to be in capital preservation mindset. Going all cash is hedging yourself, being protective in the event that we got what we got today and yesterday. Had to be cash. You had to be protective. Or hedge against some long-term positions that you have. Let's get into the two markets, obviously the NAS and SPX, and think about what could happen here. Very small possibility that we could put in the bottom in here. Very small. If I were to give it a percentage, I would say, 5%. 5% opportunity we could put a bottom in right now. And this would be because we held the back test of the previous all-time high and our original breakout in here. Here's the election night. Election night breakout, right? NASDAQ. And then we pulled back. So I would look at this as a 1, 2, and then in here, a 3 versus, maybe a 3 topped out in here, and then we pulled back, and then we topped out as a 5 up in here, and that would mean the top of the market's in, and we go into a long-term correction, which potentially that's the case right now. So right now, this is the opportunity. We got to hold this zone, and that's exactly where we just bounced from, right? We just bounced from that territory right now. Not a bounce, a little bit of a bounce, short-term bounce. And this is going to be tough because if we start to correct from here back up, it's going to keep that thought in my head of, what if that's it, right? Conditioned that potentially this can be by the dip because we still held the back test here, right? It almost feel like, okay, like don't tease me here. Just break this, and then I know, okay, it's over, and then we're going to see a bounce anyways. So from a short-term perspective right now, the next move should be a bounce. And the next move will be a bounce. Now we're going to find out what's going to happen tonight, if they're going to bounce it tonight or they're going to dump it tonight, and then we'll see a bounce tomorrow. So there's a hell of a bull trade already shaping up if you're just ready for that short-term trade. Don't forget, our window of opportunity will be very small. It'll be like this. We'll have that small window of opportunity. we will make a new leg down. It'd be very surprising to not make a new leg down. I believe we're going to come down into this zone in here, which is, let's clean this up. So we will come down into 11.810, 11.914. So we'll be looking for a bounce and then another sharp movement down. And then from here, we're really going to find out what kind of market is going to come. How aggressive the bounce went down there, how fast it went down there, what's the reaction out of the zone. But ultimately, I believe we'll come down in here. So I believe we're going to see this. We're going to see this move in the market here, drop, one more, drop, and then we'll see something along these lines. In here, once we get back into this zone, maybe it's the low, maybe it's the high, right? And then from there, we're going to find out, is it going to be a reversal or is it going to be more downwards pressure? So we're going to wait and see what that's going to look like once we get more information. And if we do get that theory, that's the possibility. So keep an open mind. That's a possibility. After the short-term bounce, like I don't want to scare anybody, right? But this is a possibility. This would be a 30% correction. So that's the extreme. Not to scare anybody. I like this. We will have to see. Just rewind the video like 10 seconds to see what it would take for that to happen. But that's a possibility that could play out. And that would be going to the golden pocket from our low of the March lows, Corona crash, to our top. And then seeing a long consolidation correction, which will have glorious bounce plays throughout. We're going to be in a challenge right now. We just came out of a massive run in the market. Massive run. How big was the run on the NASDAQ? The run was 109%, right? So we're just coming out of this zone. It's going to be very hard for you to be conditioned that we could slowly get down into this much of a correction. Because every bounce is going to look like a big bull trade, right? Okay, that's at the bottom's end, that's the bottom end. Let's not negate, and let's not throw out the window that the bottom could be in. We're going to know. We will watch the chart as it prints and determine, okay, here's new information. We're just trying to forecast a little bit further out right now, right? A little bit further out right now, I do see we got to make one more low. We're going to, if we lose this zone, we're going to bounce and we're going to make one new low. Now, let's relate that to SPX, which has been absolutely glorious as well. Off of our bottom. So the NASDAQ was 109. How much was SPX? Let's calculate this. SPX was 82. And guys, if we are correcting down, there's still bull plays out there. We see the rotation right now. We see the reopening stocks. I will lean that we won't see that because of the economy opening back up, right? People are going to be out there. People are going to be spending money. That's where I believe we won't see that 33 type, long-term bear market, and that once we make our new low here, we could really decipher what the market's going to go, where it's going to go, and we'll have a lot more information. The red flag for now, well, everything right now, it kind of feels like a red flag. But whenever we have the sharp movements down, we generally come from a big run, we lose a trend line and we drop. Big run, lose a trend line, we drop. I mean, this is Corona. This is also fueled by significant pressure in the market due to an event. And in this case, we lost that trend line today. And we can't ignore these things. We can't be like, oh, this is it. This is the bottom now. Whoa, we were reliant that we were going to hold this zone. We didn't hold our zones, so we're in correction now. And if you look at this correction and we think about just dropping, what did we drop so far? I think we dropped 6%. What is this? We've dropped, 6%, right? If we go 10%, which is, some of the corrections we've recently had, that would bring us down into this GP, right? Which would bring us down to 348, 350 if we do a 10% correction. I am looking for us to get into here. We will get into here. This would be so shocking. We're right there anyways, right? We're right there. So this is very much, we're going to tap it. And this would be the GP off of what I was looking at as a wave 2, right? But if we come from our bottom, then we're looking down at this zone. So right now, I believe we've lost our trend line. depending on the strength of the bounce, this next bounce that is coming, whether it's tonight in the futures market, I don't think so. I think they'll want to do it during trading hours. Just like today, right? That early bounce today. This is also, in order to make that new low, I know we talked about like Jay Powell came on and then it didn't help, but you need to create this liquidity, right? You need a lot of people to be buying in order to dump it down, right? When you're trying to get out of positions. So, a little bit of liquidity was created again. And this is the second time they've done this. It's sneaky. You have to see it. You have to be prepared for it. You have to be aware that it is potentially there. And then, and then you can respond to it. But right now, I would say, what kind of a bounce are we going to get? When we bounce, our natural instinct is going to be low as in. I know. It's going to happen. We're going to watch the lower trend line. Do we reject the lower trend line? And then we revisit the zone? Or do we just bear flag in here? And it's quite simple and it's very easy to see. And we're going to make the new leg down. I would not be an aggressive buyer or a swing trader until we bottom in this zone. Like, we have to hit this zone, in my opinion. So I wouldn't swing anything today. And that could be whatever. We could see a big higher open tomorrow, 2% futures, whatever it is, which is going to get people to think, oh, here we go, fake out. I get it. We'll see. We'll have to react as the information prints. But I don't think so. I think we'll have to hit this zone. And then after the zone, we will determine how strong the bounce is, what's the volume. We'll have more information, right? And then potentially one more leg down, and we could be 359, 350. We could think there. And that's okay, guys. I want you to know that this is okay. This is okay. Okay? Because that provides this, provides this, provides this. And there is where we make cake. We get breaded up. In those moments, after withstanding those pullbacks, we make the biggest amount of money possible. I've done it over and over again. And remember last year, we got protective. We hit the bottom. What did we do? Everybody made a new all-time high. My account hit higher highs. This is the common theme. Everybody, I made higher highs. This is fantastic. I love it, right? Now, that's what happens after you get something like this. Let that fear not cause fear in you. Let that fear, if it does appear in the market, like this would be fear, give you the foresight to recognize this is going to make me a lot of money. Cash is king. And if you protected your cash and you protected your mental capital, you're going to be ready to slay second quarter, third quarter, whatever it is of 2021 and get back up to new all-time highs. Peace out, everybody.